Kia ora and welcome to 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news of more tough data releases. The American merchandise trade deficit rose to $60 billion in March from February as exports slumped more than imports. That was the same level for March 2019, indicating zero progress for the year. In fact, worldwide air cargo volumes fell sharply in February, and by April so much flight capacity was taken out of service there is now a severe shortage. The US Conference Board Consumer Sentiment Survey plunged further in April, following its sharp decline in March. The present situation sub-index is at its lowest on record, and its overall index is at a 6-year low. The American Red Book survey tracking retail sales shows them 8% lower in March than the same month a year ago, a very weak entry into the pandemic weeks ahead. And mirroring these consumer surveys is the Richmond Fed's factory survey for the powerhouse Mid-Atlantic states, and that had its largest one-month drop on record and to a record low. A quarter of Americans now say they either have or expect to lose their jobs, a level never before recorded. And the US Fed is still widening its eligibility criteria from whom it will buy bonds, now allowing 200 more local governments to participate. In China, electricity consumption fell 5% in March from the same month a year ago, a sharp reversal, but less than expected and far less than the sharper drop in February. They now expect the year 2020 will show a rise in electricity consumption. And staying in China, they revealed that demand for gold has plunged 50% in March compared to the same quarter a year ago. That means the gold market missed about 150 tonnes of demand, a globally significant shift. And in Australia, consumer confidence has stopped falling, even if only marginally, but it is still at record low levels. In equity markets, the S&P 500 is virtually unchanged in afternoon trading today as they wait for some signature earnings reports. That comes after the enthusiastic rally in Europe extended, with most markets up by another 1.5% overnight. Yesterday, key Asian markets were mixed, with Shanghai and Tokyo flat, but Hong Kong was up strongly. But it was the NZX 50 that starred yesterday, up an impressive 3.3%, while the ASX 200 closed marginally lower. US Treasury 10-year yield is softer today by 4 basis points at just under 0.61%, and gold is down $3 to $1,709 an ounce. Oil prices are slightly lower again today, now currently just on $13 a barrel, a small 50-cent drop. But although they did fall to $10 at one point overnight in some wild swings. And the Kiwi dollar has firmed overnight against the greenback, is now at 60.7 US cents. On the cross rates, it's a different story. We're down to 93.2 Australian cents, that's a half-cent dip. Against the euro, we're still firm at 56 euro cents, and that means our trade-weighted index is at 66.6 and above our 4-week average. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.